Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Thursday, December 1st. Let's see what happened with that NASDAQ market. We did back off a bit and we did trade below its bearish level. The magnitude change between the bullish and bearish level in that market is $800 a contract. I don't look for strong follow through to the downside, but a market to break lower on Thursday, but to give us that shadow on the lows. Let's see what's happening with the dollar, and what we can see here is the euro is getting weaker as the dollar now starts to get stronger again. So that market gives us that kind of a follow through that we'd look for based upon what I call lead up strategy. So interesting movement. The issue is, can we get follow through on that? I think we will overall, but I think most of that could happen on Friday. I also had some questions regarding how the magnitude of change occurs here between that bullish and bearish levels. Let's talk about that. Each tick in this market, small price change of 0.0001 is equal to $12.50. This represents 445 ticks, those small increments. And so 445 times $12.50, you come up with $5,562.50 per contract. So that's how that value was calculated. Here in the Swissy, the magnitude of change tick-wise in that market was 365 ticks times $12.50, and that's $4,562.50. And our friend Mr. Yen, it's also, in this case, the magnitude of change is 705 ticks, or $8,812.50. So those markets are all $12.50 a tick. The Aussie dollar, Canadian dollar, well, just talk about the Aussie dollar. It traded below its bearish level. And the magnitude change here in that market is $350 a contract. That's $10 a tick. Same thing is true here in the Canadian dollar. The British pound trades in $6.25 a tick, or in a two-tick move, it's $12.50. Now let's talk about what we expect to see here for the euro. I'm looking for further movement to the downside, but big challenges ahead for that market. Let's move on and take a look at fixed income. I'm looking for further weakness in this market, a down move today in the 10-year notes. What you're seeing here is Asia starting to trade here a bit, Asia and Australia, but I do look for follow through to the downside. In the metals markets, there's no reason, I believe, for gold to rally. We're seeing that continued weakness in yesterday's action, and I'm looking for that to continue in today's trade. Let's move on though, and let's take a look at gold. Gold, as I just mentioned, we're looking for it to get weaker, but let's take a look at crude oil. We had an OPEC agreement that came out today. Whether it's going to be maintained and followed, that's another issue, but right now we're seeing this rally. So to see some further movement to the upside, the afterglow of this agreement, yes, I wouldn't be surprised to see it all unchanged to higher today in crude oil. However, I think we need to be concerned about this movement. Now, the difference between that bearish and bullish level here in the crude oil market is $600 a contract. And in soybeans, well, we backed off a bit. The issue with soybeans is somewhat complex, but it does go back to supply globally, and we're seeing some weakness in that market. And here in this market, we also want to talk about wheat. It did trade above its bullish level. The magnitude change between the bearish and bullish level in that market is $600 a contract. And I'm looking for further movement to the downside. Well, that concludes today's market studies. Thank you for being with me. Look forward to being with you again, and as always, take care.